Hi, I'm Chris Steele, and I want to welcome all of you to our Rich Dad World live stream event. Robert Kiyosaki has joined me, and you're in for a real treat. You're going to enjoy exclusive access to Robert Kiyosaki and the strategies he uses to create cash flow and build wealth in the current economy. In addition, you're going to meet Robert's $400 million man, Ken McElroy, a longtime friend of Robert's and a true real estate investing expert. During this session, you're going to get to hear how he and Robert got started and what they've learned along the way. You'll also learn why they're very excited about investing in real estate today. As an added bonus for joining us today, you're also going to get instant access to Robert's Cashflow Blueprint Companion Guide, a free resource that will help increase your monthly cash flow starting today. So make sure you stay until the end to receive your added bonus. As you prepare now to learn from the experts, I encourage you to shut your door, tell everyone you're busy, and I'd also suggest that you grab a notepad so you can take notes. Be sure to write down action items that apply to your personal plan to escape the rat race once and for all. Now, without any further delay, let's get to the reason why you joined us today and jump right in.
Hello, this is Robert Kiyosaki. It's a great friend and partner, Kenny McElroy.
Hi.
And we're here to talk to you about one of our favorite subjects. It's the subject of real estate and how you become a tycoon like Kenny and stuff like this. But Kenny is the author of these books here, The ABCs of Real Estate Investing. This is the basic, this is the primer, this is the ABCs. And this one here is the ABCs of Property Management. Because one of the big differences between real estate and stocks is management. Now, if you can't manage, stay in stocks, right, Kenny?
Right, that's exactly right.
Yeah, because management is the key. And Kenny is a property manager. And this one here is the Advanced Guide to Real Estate Investing. And this is for the high finance guys, but you got to start here first. You got to get this one and then this one here. Because what we'll be talking about today is how you get infinite returns on your money and things like this. But you've got to start with the ABCs. You've got to be able to manage your properties and all that. So anyway, welcome to the program. And Kenny, anything you want to say?
Well, I just would want to say that everybody starts in the same spot. Everybody starts like you started with a one bedroom. I started with a 1 bedroom, 1 bath, also condo, and then but the fundamentals are the same all the way through.
Yeah, and so a lot of times what we're going to be talking today is about the process. You see, education is really a process. It's not an answer. It's not a book. So for those, some of you are starting here, some of you are down here, some of you are at the other end already. But the point here is this: you don't get it all in one day. You don't get it from a book. So as Kenny said, mine started with a 1 bedroom, 1 bath on the island of Maui, and yours was where?
And mine was in Scottsdale, Arizona.
Yeah. So we all start, and the problem is most people don't start. And generally what they say is, I don't have the money and things like this, and that's ridiculous. We didn't have money either.
No, that was when I first got into the business. That's what I really thought you needed. I think that's what holds a lot of people back, and I think they also use it as an excuse.
Yeah.
They say, I don't have the money, therefore I can't start, which it's not that at all. There's more money than there are deals. That's been my experience now. And so once I got the education, then I realized that there's a lot of people, just like ones with money, that are looking for a place to put it.
And what's happening today, and by the way, if you hear some earth-shaking news in the background and all that, is because in that side of our building and that side of the building, they're tearing all those buildings down and putting up more
high-rise apartments, yeah.
And real estate is booming. There's more money than ever before. I was at a dinner last night, and everybody was talking about how much money. People are actually giving money back because they can't find deals. There's so much money,
That's exactly right. And you can see how the banks react, how much money there is in the economy, because when the banks basically are turning away deposits or charging you to put your money in the bank, then you know that there's a lot of money in the system.
And that's why I said savers are losers, because every time the government prints money, the value of money goes down, but really debtors are winners. And so what we'll be talking today is about how we start here and go over here, because where Kenny's at right now, at this end of the process, is that you don't need much of your own money anymore, do you?
No, not anymore. But the thing is there's different levels, as you know. So I'm at a new process where, first I was doing a bunch of small deals, and then we started getting into bigger deals. And then you start getting into bigger money and bigger deals even more. So I feel like each time I get to another level, I'm back on this side of the process, for the next level.
Right. So Kenny and I have been friends for about 12, 15 years now. We've made millions of dollars together. We've never lost any money, ups and downs. Even when it was going down, we're making money. And that is the power of Rich Dad's education, Rich Dad's coaching, our books, our games, and all that, is to get your mind into the game, because that's all it really is, right?
Well, people ask, sometimes they question, well, what do you mean you've never lost any money? Well, the reason is that because everything that we've done has been based on cash flow. So every property that we've purchased together has always been based on cash flow. So
we're going to explain that most people flip properties. We don't flip.
Right. So like if you buy a piece of land, there's no cash flow. If you buy a vacant building, there's no cash flow. But everything we buy is based on cash flow. So we're not as focused as the value of the project, because we're not trying to sell it at a higher price later. Although we are focused on that. We want to make sure that the property goes up in value. But if it doesn't, if it stays flat or even goes down, at least we have that cash flow to fall back on.
Right. So the point here, ladies and gentlemen, if you're just starting out and you're right here, you may not have much money, may not have a job and all this, but that's really not an excuse, because you can still start. And I would suggest, getting Kenny's ABCs of real estate, looking at programs, because we're going to go into, let's start out how I started. It was, the reason I got into real estate was that my rich dad, this is back in the 70s, he knew that President Nixon had taken the dollar off of the gold standard and the prices were starting to rise. And so Rich Dad said one thing, he says, don't save money, learn how to use debt. And so it's counterintuitive to what most people think, because most financial advisors say save money and get out of debt. And we're saying don't save money, get into debt. So it's a different process, so that's really it. So for me, I was in the Marine Corps. I was still flying out of Hawaii. And Rich Dad says, you got to get some education. I said, well, how do you get that? I asked if he would teach me. He says, no, waste my time. So I signed up for a little real estate course. I've told this story before. I get tired of listening to myself. It was $385. It was 3 days. That was the start. So I signed up, signed my name, sat down on the course. 3 days later, at the end of the course, he was a great instructor because he was a real estate investor. He didn't need the money. And that's when you know the guy is real, because you could tell he didn't need the money. He liked teaching. He liked inspiring people. So it's just like my rich dad. He says, you don't need the money. So then the next thing he said at the end of the program, he says, when you leave this program, it's 3 days, Friday, Saturday, Sunday, he says, your education begins now. What you do at the end, as Kenny says, you get through the process of the 3 days and you start again. That's the process. So he says, at the end, when you end Monday morning, your job is to look at 100 properties. 100 properties in 90 days. Take everything I've taught you and look at 100 properties. That was the start. So naturally, 30 guys, 35 guys in the class, they all say, okay, yeah, we'll all do it. We all break into little teams. And as you know, by Tuesday, they all quit because they're too busy. They got through the school, they didn't start here again. But there's 3 or 4 other guys and we stayed through it, and we went to real estate agents, went through the little files. It was really antiquated ways of MLS, multiple listing services. We were looking for little dinky deals, small deals, because that's all we could afford. We didn't have any money. So we kept looking, I'll go knocking on doors at real estate agents, and realtors, they're not the best investors, are they?
No. They're all focused on commissions, normally.
And I go knocking on the doors, and the first thing they say to me, you can't do that here. This is Hawaii. You can do that in mainland, in California, Nebraska, but you can't do it here in Hawaii. And that's the first thing one of the first things my advisor said is that's what losers will tell you. You can't do that here. Look, somebody is doing it here. May not be the real estate agent, but it might be you. So I knocked on the doors. We'd find these deals. We had to go look at them, and we had to write down. It was a 3-bedroom, 2-bath, 65. Back then it was $65,000. It was a lot of money in Hawaii. Now they're $4 million. But we would write these things down and make an offer and do this. And so at the end of 90 days, we had 100 of these. And it was day and night. We just kept going until we got it done. And that was the process.
That's right.
At the end of the process, I'd gone through 100 deals. And it was like, wow. I learned more going through the process, talking to real estate agents, knocking on doors, looking at different properties, and finally I was desperate. This guy says, well, I got what you're looking for on the island of Maui. Now, most people think Maui is too expensive. How can that be? How can Maui be affordable? But that's your block. So I flew over to Maui. I found this little one-bedroom, one-bath, a condo right in Kaanapali, the richest place on earth. Little one-bedroom, one-bath condo for $18,000. I went, holy mackerel. But the deal was I could not use any of my money. That was, the advisor says, I'm going to teach you so you'll never need to use your money again. If you can raise capital, you'll always be a rich man. So I said, okay. So I go to this little $18,000 unit, little dinky thing. $18,000. I said, what's the price on it? He says, how much do I put down? He says, $2,000, or $1,800, 10% down. It was a foreclosure. I broke up my credit card and I bought it. So I had no money in the deal and I made $25 a month. No money in the deal, $25 a month. And my brain went, it shook. I went, oh my God, I'll never need money again. I can never say I can't afford it. And I can never say I can't do that. I went, oh my God. And that's how I got started. And today, Kenny and I do lots of deals, but Kenny kept on and I kind of stayed with the small. I think I stopped at 100 units. And I said, this is not my business. 100 units is a lot of work. So Kenny took off after that, and we still make millions of dollars. When the market crashed, we made even more. But the process is the same, right?
Yeah, it's absolutely the same.
One bedroom, one bath. How many units did you do last?
Last year, about 1,000 units.
Same process, but you have to learn the process. How did you get started?
Well, I was probably not unlike a lot of people where I went into college not really having much direction on what I wanted to be or who I wanted to do, but there's a tremendous amount of pressure on a kid, to pick. And so what happened was a friend of mine called me up and he said, hey, if you want, you can manage this building downtown Seattle and you get free rent. And of course, as a college kid, that was really appealing. So that's what I did. I ended up managing a 60-unit building downtown Seattle. And I remember it was a one bedroom, and I made I think it was about $400 a month plus a one bedroom. And of course, I was collecting the rent and turning the units and all those kinds of things. And so that was really where my real education began. I didn't know it at the time. And then from there, what happened was part of the process of managing a building. I was still wrapping up school at the time, and Seattle's an area where I grew up and I was familiar with. But the owner would pull up in this beautiful car, and they'd walk up, and we'd have these monthly meetings about how much money was collected and what the expenses were. And so I had to learn about finances and financials and things like that. And then I started to really understand for the first time what it means when you have high vacancy, and what it means if you're not collecting all the rent, and also if you're overspending or if something breaks and it wasn't anticipated, and all those things. So that was unbelievably important time for me. It was a lot of work. And then what I decided to do is I decided to go to work for that firm that managed the company. It was based in Seattle. And so that was when my property management career started. And then I started to manage more and more properties. And what I realized was, it took about a year or two, I realized that I was on the wrong side of the desk. I was doing all the work. And, these guys, really good people, were investing in these projects. And some of them were flying out from Silicon Valley, and they were buying stuff in Seattle, and I was managing them, and I didn't realize how important I was, because property management is extremely important.
That's this book here. If I can say, ABCs of Property Management. It is a key to real estate. Let me say it one more time. If you don't like management, stay in stocks, because real estate is running a business. It is a management-intensive affair.
Very, very important. And so what was happening is these really rich guys were flying in, and they were amazing folks. And that's when I got the whole education about equity and investments. And I started to piece it together, and then I started learning about debt, and all of a sudden, fast forward 8-9 years later, after doing this over thousands and thousands of units, that's when I first started to make the first step on buying my first ones. So, and now we own 8,000 units ourselves, and we have 250 employees, and we're building another 1,500 right now in Arizona, And the whole organization is based around investments, investing.
Right. So I'll say it again. Kenny went down. He's far down the pipe than I am. There's no way I could do what he did. I stopped. Kim and I stopped at about 100, and Kenny picked up from there, because it's not our business. Our business is kind of the rich dad company of other businesses. So at that point, we became the rich guys who Kenny says, I need another million comes in, done, and all this. But I would not have been able to do that if I hadn't started with a little one bedroom, one bath. So I understood. So when Kenny and Kim and I talked, there's kind of an understanding that's
well,
different.
with all investors, it's a high level of understanding. It's the words you use. It's the questions you ask.
The strategies.
It's the education you have.
Right.
So, one of the things that we want as we find properties and we find investors for our properties is we want sophisticated investors that understand real estate and understand the tax benefits of real estate and the cash flow part of real estate, and they understand how it works.
So it was, I guess you and Ross were you were just starting out also at the time, and so when you, Kenny, were doing some dinky little stuff together, then one day he says, he went to the big leagues, which was good for us, because all we had to do is put our money in, but we would not have put our money in if we didn't understand what you were doing.
Right.
And this is the difference, sports fans. If you're in stocks, you're in equity, right?
Well, and you don't have any control. And I always felt like with the management, that's why I liked it, because no matter what the property was doing, I could determine whether or not I could increase the value or increase the cash flow. And if it didn't happen, then I just passed.
But the point here is this, you see, stock people are into the equity. It's their cash. The reason I invest with Kenny is because we're into debt. You see, the beauty of real estate over stocks, there's margins and things like that with stocks, but with real estate, banks are really anxious to lend you money if you're good. If you're not good, they don't lend you money. So again, it goes back to when somebody says, I don't have money, it's because you don't have education. Stuff like this and this and this. You go, well, I don't have money, so I don't start. Well, you're not supposed to use your own money anyway. And that was my rich dad's lesson to me back in the 70s. He says, look, the dollar is no longer backed by gold. The dollar is now backed by debt, U.S. Treasuries. And he says, if you're going to be rich, you'd better understand how to use debt. Meanwhile, the other people, all the financial people, save, and put your money in the mutual funds. Would you do that?
No. As a matter of fact, if you think about it, the whole system is designed to use bank financing. I mean, all these people that are working so hard are actually putting all their money into the bank. Well, those deposits are a liability. They're an expense to the bank. So if you put money in the bank, it's an expense to the bank because they have to pay you interest. So they have to lend it.
Yeah, so let me draw a diagram here. It's the process. Those of you who read Rich Dad, Poor Dad, there's income statement and balance sheet. So when you put your savings over here to the bank, it's their liability because they got to pay interest on it.
Right.
So what they want to do is move this over here.
Right, and that's what they do.
And so this is where Ken shows up and says, thank you very much.
It's the same thing with a life insurance company or a pension or even a 401k. That money gets invested. So whatever, that's why these financial planners say save, save, save. You know why? Because they want your savings. Those savings that people put in the bank, this is all people, gets invested. And so we're asking you guys to be over here. And you can do this.
In other words, if this is a bank or a mutual fund company or whatever it is, the moment you put your savings in here or you put your 401k to the bank, it's a liability because they're now responsible for it.
Right.
And they've got to move that money over here. The only way they can move that is by debt.
Correct.
So Kenny goes up there to the insurance company, a mutual fund company, and he says, can I have some money? I got this business, I got this huge project over here, I need to move it. And today, the big problem is you guys have too much money, right?
That's right. There's so much money in savings. If you just Google what consumers are saving now, you're going to see that this is at a very, very high point right now because of the recession. It was at a very low point at the beginning of the recession, and now it's very, very high. And so that's why interest rates are low. that because they're trying to lend it out so much. And again, it's just a supply and demand thing. Because there's so much money in savings that it's so competitive that rates are low.
Right. So this is the strange part. This is the bank. Your savings are their liability, but if this is you, your savings are your asset.
Right.
That's why it's called a balance sheet. So the reason my rich dad says I had to learn how to, invest in real estate and get comfortable with it, start the process, was because I needed to borrow this money out. Whereas the other financial advisors say, keep your money over here. To me, this is really stupid, especially since he is printing, what, 75 billion
well,
dollars
that's the
a month?
thing. I mean, why would you save money right now? You should be using that money and putting it into investments that hedge inflation.
Yeah.
That's the only way to make money in this next few years.
Yeah. So if I could go back to this whole thing, both Ken and I started over here with no money. We didn't have any money, but we had to. This made us smarter. And then in the process now, I'd rather be on this side than on this side.
Right, and what's interesting is neither of us knew this stuff when we got out of school.
No.
You kind of bumble through it. You get a loan and you're like, well, why are you giving me all this money for so cheap? Well, it's because they need to lend it out. So different institutions have lots of money, and their job is to place it. They place it in business, lines of credit, real estate, and all kinds of other investments.
And they love real estate.
They do love real estate.
So think of it this way. If you're a banker and your savings and your 401k are here, the bank's in trouble.
Right.
Because they've got to pay you interest on it.
Right.
And they don't want to pay you interest. So let's say they're paying you 1%, they're going to lend it out at 5%.
Right.
That's how money is made.
That's how they make money.
And that is the game of money. So really, that's why I took this course back in 1973, went through the process, looking at the 100 houses. I had my rich dad as my coach. I'd go in and talk, because I'd show him this deal, and he'd laugh at me. He goes, what the hell are you doing? But if I wasn't doing anything, he couldn't help me, right?
Right.
And you had the same thing. You had your guys who ran your company telling you what to look at, right?
That's exactly right. I mean, you have to have something. That's why I like the very first seminar you did, where you had to go do 100 deals, because you learned a lot.
Oh.
And so when you went back to talk to him, you had all this knowledge and had all this real knowledge of things that you could actually get into and discuss.
Yeah, but if it's only textbook, I learned nothing.
Right.
If I don't make any mistakes, I learn nothing. And then you learn so much about people, don't you?
Yeah, you do.
Boy, I mean, school is a joke compared to what like, try collecting rent. I mean, you want excitement, go collect rent, right?
Oh, I know. We had some properties where the manager would carry a gun with them, and we're knocking on the door, and guess what? There were guns on the inside too.
Yeah. Remember our friend Curtis Oaks?
Oh yeah.
He's a big African American guy, and I said, Curtis, what's your niche in the real estate market? He says, Curtis is a big African American guy, wears a black trench coat and dark glasses, looks like Shaft and all this stuff.
I know.
He says,
yeah, he loves it too.
He loves it. He says, I go where a white man dare not go.
He's done really well in that market too.
Yeah, that's his niche. He goes and collects in the low rent areas of Oakland, California.
Right.
That is his niche. Kenny and I go in there. I mean, our hubcaps would be gone, our watches would be gone, and we'd be going, what happened?
Yeah, exactly right.
So really, it's really this process. And I ask you to start. So we do this for Rich Dad's Education. We have books, we have board games. But the idea is to get into this column here, the asset column. So that's what Kenny says today. He has, 8,000?
Yeah.
8,000 units over here. Kim and I have about 4,000. But it all started with one bedroom, one bath.
One bath, right.
So we encourage you to keep going. There's one more thing I want you to think about, and maybe you can help me with this because I'm going to wing it, is this word here. Okay. ROI stands for return on an investment. So when guys tell me I'm getting an 8% ROI, I'm going, geez, that's chump change. And why would you work for 8%? That is so low. Today, guys are happy to get 5%. 3%. So this is the point here. The more debt you use, the higher your ROI. It is so counterintuitive to what people are thinking. So let's say I have 100% debt. My first property was $18,000. I put $2,000 down with a credit card, and I was making $25 a month.
I think that's the best example, Robert, because essentially what you did was you didn't use any of your own money. So the only costs that you had was whatever your debt was and whatever it cost the $1,800 on your credit card was.
Right. So but the idea was not to make money. The idea was to train my mind to think that I want 100% debt. Most people, I want to get out of debt. I want to get out of debt. I want to get out of debt. And what we're saying here is that debt pays all your expenses and gives you some income. That's really as simple as it gets. So we started with this. So if I have no money in the deal, it's 100% debt, and I'm making $25, what is my return on investment?
It's infinite.
Yeah, it's this.
Right. I mean, you basically have no investment, and you're making $25 a month.
Yeah, no money in the deal. It's just knowledge going into the deal. Now, I learned a lot on that process, and it wasn't all hunky-dory. But today, this is what we're doing. The difference is today, how much money do you think you borrowed last year?
We probably borrowed $80 million.
Okay. In debt.
Yeah.
And anyway, we'll go. Eventually, your goal is to have 100% debt, right?
Yeah. So the reason why we want so much debt is because if I'm borrowing right now, I'm borrowing at say 4 or 4.5%, and inflation is say 4.5%. Then I'm using basically your money, pension fund,
mutual funds, savings.
Insurance, savings. I'm using your money to hedge inflation and buying assets. So that's how the system works, and that's how the wealthy get really wealthy.
So this is what we teach people. The whole part here is you have the power to do it. I mean, anybody can do this. Anybody can. Well, this is today, but there's still deals. There's many deals around.
Well, you think about it.
Small deals.
Yeah, but I mean, the most obvious are using bank debt to buy a home.
Well, it's not even that. It's how you think about it. You see, the best thing about doing those 100 deals is I was learning to think about debt is good. As long as you have in your mind that debt is bad, I want to use my equity, your ROI goes down.
That's a good point. And there is bad debt, of course. Bad debt would be credit card debt, or it could be
if it was costing me $25.
Yeah, exactly right. Yeah, so there's definitely debt that you don't want to get into. But we're talking about debt that's paid by a tenant. Yeah. Debt that's paid off by somebody else. So that's a really important point. So if you're borrowing money, you're going to want to make sure that you have the rent to cover it.
So years and years ago, Kenny came to us when he was getting started on this infinite return type of thing. Was it
Edgewood?
Edgewood. Can you tell us a little about that deal real quickly?
Yeah, so that property, it was
Once again, if I hadn't done this myself, I would not understand what Kenny said.
It was a 144 unit property that was existing it was 95% occupied with tenants. So that was an important piece. And then next door it had another 10 acres. And so the deal is that I was going to build a second phase on the 10 acres, and then we were going to have one property that was 256 units. And so that's what we did. So we took the first 144 units and the land, and we went to the bank, and we got a construction loan to build the second phase. And then we built the second phase, and through good management, we filled up the property. And then we went back to the bank, and we refinanced the whole project and got one loan on it. So we used debt to build it. We used debt to take out that construction debt.
But this is the way it looked for Kim and I. We're one of 4 investors, I think, in that deal, something like that. So what we did was we had this property, Edgewood.
Yep.
And it was pumping about $300,000.
Yeah.
So Kim and I, every year, were receiving $300,000
in cash flow from the tenants.
Income, most of it tax-free.
Yes.
Because of depreciation and all that, all those things you have to learn. So $300,000 for most people is a lot of money. The problem was Kim and I had I think 1 million in it, right?
Yeah, I think so.
We had 1 million equity in it. So what Kenny did when he refinanced it, he gave us our million back. So Kim and I got all of our $1 million back, right?
Yeah, through a refinance.
And we still had this.
Right.
So we were receiving $300,000 with no money into a deal. To me, that's a great deal.
Yeah, and people might ask how. So
Well,
there's a lot of things that happen inside of here. One was that this was over a 5 or 6 year period. The rents had gone up. We had increased the value. And during that time, interest rates went down. If you remember, I think we borrowed the original at somewhere around 7%, and then we refinanced somewhere around 5%. So we actually saved on the loan, on the interest rate of the loan. And so what we had was a property that was worth a lot more, and it still cash flowed very close to what it cash flowed before, and we got the $1 million out. And the $1 million was tax free because it's a refinance. So when you pull money out from, when you put a new loan over an old loan and you pull that money out, that's tax free.
So with that $1 million, we gave it back to Kenny, another deal, money, same process, goes out, goes out, goes out, and now it's huge.
Yeah, it's what we call the velocity of money. Right. So now at that point, Robert and Kim were still in the deal. They were still cash flowing, and then that $1 million was also at work somewhere else. It's a long-term strategy. It's not for flippers. Right. It's definitely based on cash flow.
It's actually no different than the first one.
That's right. That's right.
It was no money into the deal. I'm making $25 a month. But it's a way you think about it. And so I'm not saying it's easy and all that, but again, it starts as a process.
Yeah, and it's funny, people ask, because now, of course, Edgewood is infinite. There's no investment in the property, and it produces a great deal of cash flow every year.
And you're raising the rents, right?
That's right. Yeah, we're raising the rents, especially now in this market. But now people come to us and say, do you want to sell? Do you want to sell? And the question is why would we? Because it's producing all this cash flow and we have no investment. So all it would do is create a taxable event. So
we don't want the money, if you understand that.
Right. Yes, there's millions of dollars in equity in the project, but we're not interested in that. We're interested in the cash flow. It's a big difference in the way we think.
Yeah, we want this here.
That's right. We want the monthly and annual recurring cash flow into our own bank accounts.
So everybody, a lot of people ask, well, when is it enough? When is it enough? It has nothing to do with enough. It's fun, isn't it?
Yeah, it has nothing to do with that. It's all about, the neat part about it is we're doing it all over Texas, as you know. We're going into neighborhoods that are nice neighborhoods, and we're finding properties that are mismanaged and are problems in that neighborhood. So everybody embraces us, I mean everybody. I mean the city council, the mayor, the local police. They're so excited because we're going in and we're spending, in some cases millions of dollars, like that property we did in San Antonio together. We spent $7.5 million on that project. And that, all of a sudden.
That was bank money also.
It was, yeah. But that property is now an amazing property that fits into the neighborhood, and everybody's happy. It's a total win-win for the community.
So I want you all to understand this starts here.
Yes.
And if you don't start, you don't go through the process. And what I oftentimes talk about it is when I went to flight school in Florida, I couldn't fly, entered here, came out a pilot. That's the process. But if you don't go through the process, you stay here. The most important thing is how we think. And I'll give you one more thing where it takes absolutely no money, or it does take some money, but it does thinking. About 15 years ago, I wanted to have a little ranch. And Kim says, why? Ranches don't cash flow, right? It's
That's
land.
right, yeah.
So I said to Kim, well, if I can get a ranch for free, would you be happy? And she says, show me,
Yeah, how can you argue that?
Yeah, so that's, but the point here is this, it's only up here. So I went wandering around all over the Southwest and Tombstone and Bisbee, Arizona and all this. I'm looking for a property I can get for free. That was the challenge. She said, you can have as much land as you like as long as it's free, because it doesn't cash flow. So finally, I've talked about this deal. I'll do it really simple. It was 80 acres in Bisbee, Arizona. So I walked up to it, I was looking at the property, and I knew it because it was beautiful property. It was tall mountains, oak trees all over it, a little stream running through it and all this. And the problem was it was $115,000. There's no property, there's nothing, no improvement, no building on it, except for there was a little road running through it like this, and there was a little building here. And this was a stagecoach depot at one time with Wyatt Earp and all those guys who go past. This is Tombstone, Arizona over here. This is Bisbee, Arizona here. So I'm standing on this property, and I said to the realtor, doesn't know what he was, so how long has this property been for sale? He says, 10 years. I said, what's wrong with it? You know, this question, he says, I don't know. And I looked around, I said, oh, that's what's wrong with it. The sign was down. Nobody could see that. They drive by it all day long. They could never see the sign. So I said, are these guys, do they really want to sell for 100? He says, yeah, they're desperate. And I said, well, where they live? He says, Florida. I went, all of this is good news. I'm going, okay, this is good news. I said, okay, make them an offer. And Kim's watched me, said, this is the offer. I'll pay you full price, because by now they want to discount because they're not selling. I'll give you full price, but I have to have this property for free. And I will pay you in 1 year. I'll pay the whole thing in 1 year. So basically it's called, I took a note, right? So I got a note for $115,000. I take control of this property. This little building here, I put $25,000 into it, and this was the stream was running like this through it, and I built a little cabin right there. So this and this, we fixed the whole thing up, and then about 9 months later, it was finished. I put it up for sale, and we sold that. We sold 30 acres. This house, this stream, I had 50 acres left, and I sold this for $215,000. So at the end of the deal, I mean, it's only going on in my head. We get 50 acres, and I put, after expenses, let's say about $80,000 in my pocket. And I had that land for free. So these guys are happy, I'm happy, got my 50 acres. I never see it anymore, it's still beautiful. But that's how money is made from your head, just by understanding things.
It's all education, and this here happens every day somewhere, every single day. That could be a mobile home park, it could be a corner for a gas station on a commercial lot, it could be a piece for apartments, it could be a piece for single family. But this is how master plan developers make all their money. They buy a big piece of land and then they sell off parcels to the individual builders. And all the way down, people are taking chunks. And at the end, you know who makes, you know who pays for it all? The consumer. Yeah. It's whoever, you know, however these guys on the 30 acres make their money, or is actually pays for the whole project.
Yeah, well, this, you know, I had to understand loan to value and all those things they talk about here, but I knew this would be valued around this much, with an improved house and this. I knew the value, so I knew my target, what I had to set it out for. So these guys, I went and got the loan. They borrowed whatever they borrowed, but I got the money here, and I had the 50 acres. The point here is done all the time. The real lesson here is the rich don't use their money. If you understand that, all those big buildings over there, it's not anybody's money, but people who have 401ks, people who have money in the bank, people have insurance. Would you say that's true?
Without a doubt. And what's interesting is nobody, especially the realtor, didn't see any of this.
No.
And this happens a lot.
All the time.
Yeah, where, you know, even the properties that we buy, it just surprises me. We just bought that building in Tulsa, Oklahoma, and the two brokers there are really good people. Huge Rich Dad fans, by the way. And, you know, I'm like, all I'm seeing is I'm buying it for 9 and I'm going to make it worth 14. That's all I'm thinking.
That's the same as I'm going to buy it for
exactly
115.
The same.
I'm going to make it worth 215.
And you know what they're thinking is
commission.
I'm going to be able to buy a new car. And you know, I'm like, great, you know, and I'm happy to pay those guys, and they did a good job, and they brought us a deal. But the point is I'm taking a $9 million property and I'm creating value into that, and now I'm going to take that out at some future point. It's the same thing, and I just do it with multifamily. I got friends that do it with mini storage. I got friends that do it with commercial office and retail and industrial and in single family.
So the whole point here is this, going back to it, all that. Education is a process. We're still in the process. We're learning more every day. It's just the numbers get bigger, which is true.
Without a doubt. And that's the thing is, once you kind of get one thing behind you, then you find new mentors, new coaches, new people for your team, and you start to play a bigger and bigger and bigger game.
Yeah. The process is the same. The numbers get bigger.
That's all.
Means your intelligence get bigger. So I'll just close with this. I encourage you guys to go for it. We all start at one place, nothing, and then somehow we chug along. I kind of sometimes feel sorry for guys who are given the money, then they.
You're better off if you don't have it. Trust me. You're better off if you have to be creative and find the deal in your head, and then go find the money.
This is what I always say to people. I was smarter when I had no money.
Me
because
too.
I had to get smarter.
Without a doubt.
Yeah. So I'll have a final story, and you can tell a final story. Is I was in, Kenny and I live in Phoenix, and I was coming through Phoenix Airport, and this woman comes running and says, "Oh, Robert, you're a real estate investor." I said, "Yeah, I read your book, I love it." I said, "I have a house. I want you to invest with me. I want you to put the equity in." And I'm like, "Well, I'm not that stupid, I want the debt side." But she says, "I want you." I said, "Okay, what's the deal?" She says, "Oh, it's a little 3-bedroom, 2-bath house. It's $89,000, and it's really worth $95,000. I'm like, and she says, "It's the best deal in all of Phoenix. I want you to be my partner and invest in it." And I said, so she's here, and I'm down here. It might have been a good deal. It might not have been a good deal. I don't know, but it's not worth my time because it's only a 3-bedroom, 2-bath house worth $90,000. It's not worth my time. Now, 40 years ago, it was worth my time. So then at the end of it, I still remember, she was screaming at me in the airport in Phoenix, Sky Harbor Airport. "I thought you were a real estate investor. Yeah, I'm going to give you a deal and all this." I go, "It might be a great deal, but for you, not for me." And so really that's how it starts. I mean, I wish her luck, but boy, it was really tough, Anyway.
Yeah, so the one point I just wanted to make was, I think when I first started off in the business, I wanted to just do it all myself. And that was my biggest mistake.
Yeah.
Was I thought I needed to know everything about everything, and that actually prevented me from starting. And so now I started going to these, it's funny, you go to these seminars and you go to these different places and you see these people that are all trying to do the same thing, and they all have that spark inside of them, and everybody leaves and they don't follow up with anybody. And really inside of that room is really their own team. So I would just encourage everybody to just start asking. You don't need to know about financing. You just need to find somebody who does, and go ask questions and put them on your team. And you don't even need to be a realtor. You just need to find somebody who is, and go find, and you start putting this team together. And the next thing you know, as you start to meet, that things start to happen, momentum starts, and that's how you get the ball rolling. And it truly is all about education, and you'll learn from other people. But the last thing you want to have is for you to be the person who has to make all the decisions on everything and know everything, because that will limit you severely.
Right. So with that, I want to thank you for listening in. We have Rich Dad's books, we have cash flow gains, we have coaching and education. It is the start of the process. And Kenny said it exactly the best. You come through it, go back again. Yeah. And that is the process. Why don't I stop? Because it's fun, and it makes me a lot of money.
Yeah, it's fun being here.
Yeah.
I mean, I know people they're like, "What?" It's so absolute. It's so much fun. As you know, we're stepping it up again ourselves. Right. We're trying to buy a portfolio from a big bank in Texas of 1,500 units, 6 different projects. It's totally new for me, so it's exciting.
But the other part about, you can ask Kenny this, people, it's really a two economy world today, rich and poor. Everybody else is poor. If you just have stock, you're not in the game anymore. So for Kenny, he says, I need to raise $65 million and all that. How long would it take you to get the money?
Not very long now. I mean, just because of the track record. So, a week maybe.
Right now, when Kenny calls us, I have a deal. So I don't even ask him what the deal is. I'll place this much. There's so much money out there looking for somebody like Kenny who can take a lot of money and make more money with it.
Yeah, you have to have the track record and the experience and the team behind you to do that. But you're right, and it's, as I was saying, it's a 20-year overnight success, right? You know how it is. It takes a long time to get to that point to where you get people's trust.
Yeah.
Then when you do, it really starts being fun because you're making them money and you money.
Yeah. So we've kind of grown up together going through this process over here. I just think it's really funny. Kenny calls up and he goes, I have this deal. I don't even ask him what the deal is. I said, I'm in for $1 million. Buy. That's real estate. That's faster than stocks, anything like that. The reason is I know that Kenny will get my money back, get me a property, and have me more cash flow. Right. So really that is the process. You have the ability. All of you do. But you have to start. You go through the ups and downs of it. I mean, it's been hell sometimes, right?
You just have to start exactly like you said. The 100 deals in 90 days is probably the best way because it forces you to talk to people. It forces you to look at things. It forces you to ask questions on things that you don't know.
Right.
Which still today, there's so much stuff that I don't know, and I learn every day. So it's never ending, and learning is very, very, very fun. And next thing you know, you're over here.
So once again, it's not about the money, it's about the process. Thank you for tuning in.